Good morning and welcome to this weekly market update from AGM Markets. Today is the 8th of February 2013. What we'll do today is kind of just give you some sort of review of what's been happening in the week and basically just looking at the sort of setups that I'm looking at and what you can focus on for next week as well. So yeah, it's purely sort of technical analysis based. We won't look at the Forex candle as it's the end of the week. We'll do that on the Mondays. So yeah, we'll look at euro dollar, cable, dollar Swiss, Aussie dollar and gold, and focus on the daily, 4-hour and the 1-hour charts. Okay then, what has been going on this week really? Well, I mean, on euro dollar we are starting to retrace, and that's what we said in last week's video. After such a sort of strong uptrend, we're due some sort of retracement, and that's what's going on at the minute. You can see yesterday's daily candle, a very bearish candle, big bearish engulfing. In fact, no, it's not bearish engulfing because the previous candle was a red one. But I mean, hey, it's kind of taken out like 3 or 4 bullish candles that are around here. So a really heavy candle yesterday. You can see that trying to get some sort of support at these previous highs here. So I'll just stick in that line up a bit so you can see it a bit clearer. So you click on right click there, click on properties, I'll change the colour, make it a little bit thicker. So you can see we're starting to get a little bit of a bounce here at the one spot 33.79. So let's say one spot 33.80s, where the buyers are coming in, but it's looking heavy in my opinion. I mean, if you look at that, yesterday's candle was a very bearish candle indeed. And hey, we have been due a retrace, and in terms of setups, I mean, if you draw a trend line support there from yeah, so it kind of coincides with the 55-day moving average, this trend line. The fib that I'm looking at would be from the lows of the year. Yeah, lows of it year round there. So if you draw that to where the high is there, you can see, if you just make it a little bit wider, see, it hasn't got come down to the 50% yet, and that's the level that I mainly look at. The 50% and 61.8 are the two key retracement levels for me. And also you can notice that the 61.8 coincides with these previous lows here, which also coincide with those previous highs. So I'd ideally look for, I mean, in my opinion, I personally think it will continue to go back down, and we could have a nice sort of confluence level around here. Imagine if it came down here to test the trend line support and a fib confluence level. That would be a very nice buying opportunity indeed, in my opinion. So yeah, in terms of daily, that's how I've got my chart set up. I'm not well, I mean, you can, I mean, yeah, I'll draw this support up here, but I personally don't think it will hold too often, but it could do. I mean, hey, the buyers are coming in, but you can see we're starting to get a bit of a upper wick on this daily candle already. So I mean, yeah, today's daily candle is very important in my opinion. If it closes, if it starts to pop up and it closes a nice bullish green candle, then that could be the low sort of setting, but it looks like it wants to further come down in my opinion. But hey, we'll see. It's an interesting setup, I think. Anyway, that's how I've got my chart laid out, especially on that daily. And in terms of the 4-hour, nothing massively interests me really. I'm more interested really in that daily chart. I mean, no, to be honest, nothing really is catch my interest. I mean, also you could bring this trend line actually a little bit more, just to tidy it up a bit there. So that's gone from daily to the 4-hour. But I mean, in terms of selling opportunities, if you want to look at a shorter time frame, like the 1 hour, you'll get a lot of people will be looking at this fib here. So the recent this yesterday's high drawn to yesterday's low. Let me make it a little bit wider. So yeah, a lot of people, if it does come up to this 50% level, it could also coincide with that 55 EMA, and we could further get a sell-off. But you can see it is forming a bear flag, a classic bear flag there. We get a downtrend, and then it starts to get a bit choppy and form some sort of flag formation. So it could continue to trickle up, maybe hit the 50%. That's what that healthier retracement I look at. But of course, you do have the 23.6 and the 38.2, which it could also bounce off. But a good odds play with me to go for the 50%. But yeah, that's how I've got my Euro chart set up then. So that's on the daily, 4 hour and 1 hour. but mainly the daily and the 1 hour are key for me at the moment. Let's go to cable. We normally do that second. On this daily chart, I can't remember where we were at to last week's. Yeah, this is the fib we're looking at. The main one here from those lows at around one spot 52.68 to the high at one spot 63.96. We started to get some support at the 61.8, but we've broken below that, and it's now come back up. So interesting price action, and not great price action to be honest with you in terms of the fib levels. Yeah, it's quite disappointing, that fib, really, because it's a really key and sort of obvious fib as well, which a lot of people are looking at, but it's not playing out that technically. So I'm going to, in fact, if we flip it to the, if we flip it to the, I mean, on the daily, it was where it should look really technical. It hasn't looked that technical, but as you can see it, we've got if we flip it to the 4-hour chart, in fact, if we flip it to the, we'll keep on the 4-hour, if we zoom in a bit again, you can see we closed above this 61.8, and then with these two candles here, we came below, spiked and closed back up. So you can see there was acted as a nice sort of support level around there. So you can now see on this 4-hour that we got above this 55 EMA, and now we're testing the 100 EMA. So yeah, I mean, that fib has been acting quite technical, but we will get rid of it because it's not that great, to be honest. I reckon it'll be better on a shorter time frame. But yeah, in terms of it's been very choppy cable. You can see a lot of spikes here. If you flip it to the 1 hour, just very, very volatile. There's been quite a bit of news out. You can see a nice play there, though, that happened, I think that was yesterday or the day before. Yeah, it was yesterday. This 100 EMA, you can see, was acting as superb support, that really clear price action. You see those candles kept on pierce. I mean, you've got about 6 or 7 candles there. So this big candle, it was a news candle, I think. We spiked above, closed above this 100 EMA, and these next sort of 5, 6, 7 candles pierced below, and we kept on closing. Well, in fact, that was a slight fake out, and then we closed below, and then we got above it, and we started to, we came up in, and we've also closed above the 200 moving average on this 1 hour chart, but nothing massively of interest. I mean, let's see what this fib's playing out like here. This could be one. Yeah, this is a key fib here, which is playing out quite technically. We'll zoom in there. Yeah, but you can flip it to the 1 hour or the 4 hour, really. This 1 hour actually probably one that you want to look for closes on. You can see it acted quite well there, so it's also previous resistance. And we can also see that on that previous spike there, it got tested in at the 50% and closed below. And you can now see that with this 1 hour candle, it's currently trying to get above the 61.8. So it's all about that 1 hour close, or if you like to play the 4 hour chart, and that 4 hour close as well. In fact, on the 4 hour, you got that 61.8% retracement, and you've also got this 100 bar moving average. So that's one setup I'd definitely look at, but it is quite choppy, so do be careful. But if you get a nice reversal there, then it could be a good selling opportunity, in my opinion. Okay, then let's move on to dollar Swiss. What do we have on this dollar Swiss daily chart? Just to keep the sort of bigger picture in mind, you've got the trend line support there. You can bring it in a little bit if you want. And on this daily chart, so if you're looking at, I mean, we are currently in a downtrend. In fact, we'll just move this this trend line up and make it a little bit neater. We'll use you shouldn't really bring it in. But it's sort of personal preference, really. Some people like to, some people don't. There we go. So yeah, we've neatened up that trend line. So if you're looking for selling opportunities, if you draw a fib from the recent bounce off of the trend line, so that you got the high there at the sort of 0 spot 93.89, and then the low is at 0 spot 90.17. So from high to low, it's starting to where it's quite near the 50%. So it'll be interesting to see what happens. It's 50% retracement on this daily chart, and also you've got the 55-day moving average just above there. So yes, if we do, I mean, it was quite shy of a test beforehand, but that's the setup I'd keep up I definitely keep that fib up in the trend line on my daily chart. That's what I keep focused on. And of course the 4 hour you can see a little bit clearer there. In fact, I need to bring that. So I just need to draw that fib again actually. So on the 4 hours and touch that low. Bear me 2 6. So I was wondering why it hasn't tested. Yeah, so that's much clearer now. So you can see that low comes in out at 0.9021. I had it a few pips below before, but I thought it was touching. And you can see we just come shy of this 50%, but some people will say that is a technical test, because sometimes it doesn't always reach the fib level. But anyway, well, in fact, the reason it hasn't actually is because you've got the 0.9200 handle. That's why it's just below it. So I'll just draw that up for you so you can see it exactly. So 0.9200. You can see, bam, right there. We've tested at 92 handle, and we're starting to sell off. So you can see that 4 hour candle. We've got quite a bit of upper wick there. We literally tested it to the pip, and we're starting to sell off. So a lot of people will already be short this as a sort of swing trade, and are looking to take out these lows here. So that's one setup currently in play. You've got this 92 handle, which is just below the 50% retracement, and also you've got that 200 bar moving average there, and a 100 bar moving average as well. So looking quite heavy dollar Swiss in my opinion, but nothing massively interesting. I think there's better charts out there. But I mean, in fact, actually, another step, if you want to flip it to a shorter time frame, a classic fib here from the low of yesterday to those highs, which are pretty much at that 92 handle. I'd be looking at the 50% retracement if we came down even further, but it looks like it's already starting to reverse already. But that's one setup I keep focused on my chart. Look at the last of the forex pairs. So it's Aussie dollar chart. Let's zoom in a bit on this daily. What do we have? This fib here, is that a correct fib? No, well below that now. If we zoom in on the shorter time frames on this 4 hour chart, you zoom in from that previous high there, 4th of February high, to the lows. That's one I'd be keeping an eye out for sort of certain selling opportunities. You can see this 55 EMA's been, not EMA, MA, has been capping on this 4 hour chart there. That candle there closed below, and that's created that new high there, which a lot of people will be keeping focused on. This this sort of downtrend that's going on at the minute. I'll just draw that there for you. See that previous bounce off there. If you draw a fib from the highs to the lows, the high is 1.0460 and the low is 1.0255. It looks like it's starting to come up now. See what happens at that 50% level, or 61.84 selling opportunities. That's done for the forex. Let's go to the gold chart. What do we have on this gold chart? If we zoom in, we have a clear downtrend going on there. And we also have, so I'll just flip it to the 4 hours to draw it neater. We also have a mini uptrend going on here as well. So it's sort of creating a triangular formation here. It is getting quite choppy around. I'll just zoom in again. It's getting choppy around the 55-day and the 100, the 55-day and the 200-day moving averages. So remember, the red is the 55-day and the gold is the 200-day moving average. You can see that we've really have been spiking, and I mean, there's two candles there close below the 200-day. I mean, it is getting quite choppy around here, but it's looking like it's starting to sort of base. It is creating higher lows, as you can see, drawn by that trend line. But it's in order for it to get some clear direction, we need to get a clear daily candlestick close above, I'd say, those two average, if we are going to get a break off this trend line resistance to test this 100-day moving average. But yeah, quite choppy the markets this week. Well, especially on the daily charts. I mean, especially on gold there, you can see some really sort of choppy action there. I mean, even on the 1 hour, it's looking. I mean, you just got to keep. That's why it's good to draw trend lines and things like that, because it does keep the perspective, the bigger term perspective. Also, there you got a clear resistance level at 1683 spot 10 there. You can see out on that one the amount of spikes here. We've had 1, 2, 3, 4, 5 spikes to try and close above that level, but we've failed each time, creating some big upper wicks there. So you can see it's just purely chopping in between the 1683 level and this trend line support. So we need a clear breakout there for any sort of momentum towards the upside or the downside. Okay, and that's all done for the charts today. I hope you enjoyed this video. Have a great weekend, and I'll catch you next week. Have a great rest of the day trading. Thanks for listening.